Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. And in today's video, we are going to be talking about the ultimate guide for investing in the stock market. So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel. And if you have any questions, concerns, make sure you ask them down in the comments. So now guys, roll the intro. Let's go. Come on. So we're starting all the way from the beginning. What is a stock? Well, a stock represents a partial ownership of a company. And pretty much the more shares you have, the more risk you have, but the more reward in ownership you have of that company. So if I went out and I bought one share of Apple stock, and if that just say Apple started doing very, very well, and they've made billions upon billions of dollars more than they were supposed to, that will entice other investors to pretty much invest in the stock because they're doing really well, which will cause share price to start going up, and you will reap the benefit of holding Apple stock. But if Apple, on the other hand, came out and said, oh my gosh, we're losing billions of dollars, you also carry that reward when Apple stock falls. So anytime you invest, there is risk. That's one of the biggest things I need you guys to understand is there is pretty much no 100% safe investment unless you invest in a lot of ETFs and stuff like that, but we'll talk about that later. So at the end of the day, when you purchase a share of a stock, you are just a very small owner of that company. Very, very small, but still an owner at the end of the day. Now, with investing in the stock market, you may hear the term, oh, you shouldn't buy individual shares, you should just invest in the general stock market. So what most people are clarifying and talking about are the three indexes. So the very first index is going to be the Dow Jones. So this represents the top 30 stocks, pretty much. More value stocks, you'll have companies like Coca-Cola in it, more of that blue chip traditional style investment. The second index you may have is the S&P 500. So the S&P 500 represents the top 500 companies in the United States. It's weighted by market cap and it's filtered out that way. So the largest holder in that ETF and index is going to be Apple, followed by the other largest companies in the United States. Now the third index is going to be called the NASDAQ. Now this is more of a newer one, but this represents a lot more tech heavy ETFs, more startups, still a fantastic investment in my opinion. The one that always carries more risk is going to be the NASDAQ, followed up by the S&P 500, followed up by the Dow Jones. But also, on the other hand, the NASDAQ has historically outperformed all those other indexes. So you definitely get risk, but more reward. Now, a lot of people find it very, very challenging to purchase individual shares. The reason why is because there is a ton of research involved. Now, most people, on the other hand, just invest into ETFs. Now, ETFs are pretty much just a pool of stock together, and most of the time they'll have a certain sector involved, or you can have the S&P 500 ETF. It's just a pool of stocks pooled together, and you will get the benefits of the growth of it. So the reason why a lot of people do it is because, like I mentioned, it's very hard to pick and choose different stock. But if you have a general outlook on maybe a sector, an ETF might be the best approach, or you can just invest in the S&P 500, Dow Jones, or NASDAQ ETFs out there and get the benefits of investing in those as well. Now, when you invest into ETFs, they're fantastic for balancing out risk, because if that's just say you have one stock that's crashing down, you will often have other stocks in there that are doing pretty decent or still consolidating, or it just reduces the risk when you have ETFs in your portfolio. So you may have heard the term dividends. So what is a dividend? Well, a dividend is pretty much when a company makes so much money they will pay their investors. Now, this is a fantastic way for beginners to start building up another passive income stream that you don't have to worry about. There's a ton of fantastic dividend ETFs, there's fantastic dividend stocks, and there's even dividend aristocrats and dividend kings. So a dividend aristocrat is when a company has been paying out a dividend for more than 25 years. But it gets better. A dividend king is when a company's been paying out a dividend more than 50 years and they've been increasing their dividend payout each and every year, which is a great way to invest. These are going to be companies like Coca-Cola, 3M, a lot more blue chip stable stocks that really get a lot of people invested because of the dividend and the very, very decent growth. Now, the reason why I love dividends as well is building up that passive income stream, starting that compound interest, And historically, dividend stocks don't fall as much in recessions. The reason why is because people are more likely to hold a stock that's paying them on a quarterly basis than a stock that's not. And there's also monthly dividend stocks. There's a ton of awesome options for people that are interested in dividends. And if you want more information, make sure you guys go ahead and check out my latest video on dividend investing. But now, okay, Carter, we understand stocks, we understand kind of what they do and how they flow. How do you buy them? Well, you need what you call a stockbroker. So you may have heard of companies like Robinhood, TD Ameritrade, Charles Schwab, M1 Finance, a whole bunch of other ones out there. So that's what these companies do. Brokers, in simple term, allows people to buy and sell stock. Back in the day, it used to be people calling up, Wall Street saying, oh my gosh, we need 100 shares of Apple. Nowadays, it's all done right here on your phone. You don't need them. And the beauty of it is Robinhood and M1 Finance and TD Ameritrade, they make it very easy for beginners to start investing in the market. Most of the time you can get an account set up within a day and start trading and investing that following day, which is crazy, but it also carries risk. Make sure you understand that. Make sure you guys do research with every investment and then invest. Now with a broker, there are several different accounts. The very first one that's more traditional is just a standard broker's account. So this is gonna be you just signing up for Robinhood. That Robinhood only offers a standard broker's account. So at the end of the day, you're gonna get taxed a little higher. It's great for people that are just starting out. The second option would be an IRA account. So there's traditional and Roth. A traditional is when you pretty much pay the taxes when you retire instead of in the beginning. And then there's Roth, where you pretty much can take out your money tax-free in retirement, but you pay the taxes in the beginning. So they both carry pros and cons. Me personally, I have a standard broker's account. I have a Roth IRA account, and I do have another standard broker's account. So how I separate them is I have a dividend account with just my standard broker's account. I have an IRA account, which I just invest generally into the market. And then my third and final account in the standard broker's account are going to be my higher growth investments. So these are going to be investing into single stocks that carry a little more risk, but it's going to be companies like Tesla, NIO, Plug Power, a whole bunch of other ones. I'm definitely diversified really well, definitely more maybe on the tech heavy side, but still have a very strong outlook. And I understand that that account is going to fluctuate and be a little more volatile than my other two, but that's all right because it's a long-term investment. Now starting out, you may look at some of these share prices like Google or Berkshire Hathaway or a variety of other very expensive stocks. So how can you buy them? I don't have hundreds of thousands of dollars to invest. Well, nowadays they offer fractional shares. So fractional shares is pretty much a great way for beginners to start investing because you don't need hundreds or thousands of dollars signing up with M1 Finance or Robinhood or a whole bunch of other accounts like SoFi or Cash App. You just need a single dollar. You don't have the excuse of, oh my gosh, that's too expensive. As long as you have a dollar, you can invest because they split your shares up. So when you invest in $1 into Google, you still own Google stock. So if that stock goes up 10%, that single dollar is gonna go up 10%. And it's just a great way to invest because it's just fractioned out. It's a great way for beginners to start investing. Now that we are understanding a lot more about investing, what are some other options with the stock market? Well, there's really two other ones. The very first one is going to be day trading. In my opinion, this is going to be very hard for people that have that 9-to-5 job and want to make some side money. Day trading requires a ton of practice, a ton of skill, a ton of education, and on average, about 85% of people that try day trading fail. So you need a lot of time and a lot of education, but it can be done if you have that outlook. Me personally, I like the second option, which is called swing trading. So this is something you can do with a 9-to-5 job. On average, you'll hold positions for about 2 weeks. But it's when you hold a stock for more than a day, but less than a year, and you'll play on these short-term volatility swings that still have very reduced risk and higher reward. So you need like a stock scanner and other scanning tools to find these, but there's a ton of options out there, and in my opinion, swing trading is the route to go for people that are starting to invest but want to try to get in and out of stock a lot easier. And you have to realize too, day trading is very difficult and it requires a ton of time, you know, required throughout the day. But it still can be done if you have like a later shift and other information. So guys, that's pretty much just how you guys can invest in the stock market. It's nothing crazy. If you have any questions, make sure you ask them down below and maybe we'll do a more detailed version, or you guys can go check out my course. I'll put a link to that down below and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.